You guys can see the
Yep.
the screen and whatnot. Okay.
I'm already hooked.
Okay, so today's presentation is Elon Musk, or How I Learned to Stop Worrying and Love the Bubble. In the background, you can see a historic graph or plot of Tesla's stock price. You can see it's really shot up in recent months to quite a level. Disclaimer, the following presentation is a personal opinion of the presenter. Reference any alleged crimes is not a formal accusation of guilt. All persons are only criminals until tried and proven to be guilty. Any accusations of a business being a scam is purely for the purpose of hyperbole and comedic effect. The presenter does not wish any financial hardships on any persons, regardless of the content of this presentation. Elon, if you see this presentation, please don't @ me on Twitter, accuse me of a crime, and or hire private investigators to stalk me.
I guess the @ me on Twitter one covers the pedophile accusations.
All of that covers the pedophile accusations.
I have one other question about this disclaimer. Do you have a material interest in the stock price going down?
Unless I, as part of like a diversified portfolio, have some fraction of Tesla stocks. I have not gone out of my way to purchase any Tesla stocks or to short any Tesla stocks, as has been the big accusation about any critical Tesla news out there, is Elon has accused people of being shorters. Goals of this presentation. This was originally intended to be an anti-Elon meme fest hit piece, really. And that's reflected in the first few slides, and it was not intended to be insightful whatsoever. However, in my research, I have discovered some actual potential insights that may definitively prove the Tesla bubble, but will only address a couple of the myriad of troubles facing Tesla at this time. If you have any questions, please let me know. First, the rebuttals. First one is that I'm just jealous of Elon, and that's why I'm putting out a hit piece against him. Yes, I am jealous of Elon. He's dating Grimes among the world's wealthiest people. Actually, this is the only reference to Grimes in the entire presentation, which was, again, not originally the intent.
All right, I'm
The
out.
original intent was to be a more all-encompassing cover of Elon, which this is not what it is. Second is that he's a visionary, and we will address this. There's a good little picture of old Elon Musk himself. Who, what, when, where, and why. The who is Elon Reeve Musk. The what is he is the founder and CEO of Tesla, the founder and CEO of SpaceX, and the founder of PayPal. He was born in 1971, and he is still alive. Originally born in South Africa and came to the United States via Canada. And the why is a question we're all still asking ourselves. Why do I have founder in quotes? So the reason for that is pretty interesting. Tesla was founded by two dudes, Martin Eberhard and Mark Tappening, in July 2003. Elon joined in January 2004. So you can see the fact that he joined about half a year after the company was founded would mean that he is no longer eligible to be considered a founder of the company. Those two individuals left in 2008, with one of them filing a suit against Elon in 2009, alleging libel, slander, and breach of contract. It's basically accusing Elon of starting rumors about him and various improprieties in order to force him out of the company. The suit was settled in 2009. The full settlement itself has not been released, but the one thing that was released is that part of the settlement now allows Musk to claim himself as a founder in the company. So that, again, by a technical definition, I suppose he is a founder, but by a real definition of what a founder is, he is not a founder. Also, for PayPal, PayPal was released by the software company Confinity in 1999. That was a Peter Thiel construct, another villainous individual. In March 2000, Confinity merged with its largest competitor, X.com, which was founded by Elon. It was a banking website. Elon became the CEO in March of 2000, and then in October of 2000, he was replaced as CEO by Peter Thiel and pretty much forced out of the company. So Elon was really only part of the company for about half a year. and he was not part of the original PayPal team, did not make PayPal, but he again claims himself as a founder, and that really establishes the trend of Musk being a big self-promoter. For him, it's really about image, the image of being the visionary who founded these companies, even though he joined on after they'd already been established. So the Tesla model itself, in theory, the model as expressed in this very technical graph is supposed to be that originally released high-priced, low-value models to prove the technology and the processes. That would be like the Tesla Roadster, which was originally released in 2008, and it also builds demand for future models. People see these relatively expensive, sought-after cars, and they want a car from that brand. In practice, it did not and currently does not really work that way for a number of reasons, a lot of them due to Elon's meddling. One is that new technologies have been integrated to every model instead of the models being increasingly simple. In many cases, they've been increasingly complex. That's like the Model X having the gull-wing doors, which we can see here, and having an air filtration system that's rated for like biological agents. There's no real reason to have any of those things. It really just complicates the car and really works against their own model. And then as you go to like the Model 3 and the Model S, they don't even have like everything that you can do for the dash is controlled through a touch screen. So if you think about like, if you're in a normal car and you want like the air vents blowing on you, you can just kind of fiddle with the air vent with one hand while still driving, no problem. With a Tesla, you need to open up a menu on a tablet and press buttons on the tablet in order to reorient the air that's blowing on you. And by Elon's request, or really demand, there are no visible vents. Everything's internal, so you can't even like look at it to see in general where the air is blowing. It's all like,
it's like those Dyson fans. Nice.
It's all built into the dash. So like, you realistically, if you want to be safe, you need to stop your car in order to like reposition a vent or change the volume on the stereo. Really anything you want to do, it's not very intuitive. You need to go through like a series of menus in order to do all these things as well.
Is it one of those fun resistive touchscreens too that like barely works?
I don't
like in most
know.
car touchscreens.
One of the criticisms that I've heard though is that like with I think the Model X had a touchscreen in the initial model, and it seemed really cool at first, but like that car came out 4 years ago. So now you have a car that's 4 years old where the touchscreen is pretty significantly out of date, and it really like dates the car.
Right.
Want to tape an iPad over the touchscreen?
Yeah, like if you have, you know, a car that has like a reasonable level of technology, you know, you could have the car even like 10 years out and it would seem pretty reasonable. But with these Tesla cars, since the focus is all on the screen, they become out of date very quickly. Also, the Tesla truck and the Tesla Semi don't fit this model because they are not part of that trend of lowering complexity and lowering price. It was really just Elon wanted to go into these new markets before they really ironed out all the kinks in their current problems, and it just kind of, you know, diluted their resources. And that's just, you know, history of Elon's impulses directing policy. He likes to tweet a lot and make very big claims without really having a lot of evidence behind it, and then basically forcing his team, forcing his engineers to figure it out. Automaking, it's logistics, baby. Basically, automaking is a very heavy capital logistics infrastructure game. It's also highly cyclical. So even though you might be having pretty good gains at one point, once you go into like a recession, really one of the first things that people pare down on is spending on big purchases like cars. And kind of just showing how hard it is to break through this market. Tesla's the first American automaker to have an initial public offering since Ford in 1956. And obviously at that point, Ford was a very established automaker. They were just transitioning from being a privately held company to being a publicly held company. So really it's been, you know, 70 years at least since there's been a new automaker trying to break into the game. Tesla, among all this, has historically overpromised delivery dates and manufacturing quotas. And really, they underestimated the nuts and bolts of running an automaker. Back in 2016 to 2017, Elon initially promised that they would have 200,000 Model 3s complete by the end of 2017. They ended up delivering 2,700 that year. And the only reason they were able to deliver that many was that they had people hand making each of their Model 3s. At least at that point, the total amount of manpower put into a Model 3 was between 3 and 4 times larger than equivalent cars from other automakers. So they were putting a pretty significant amount of time into all these cars. And as of 2019, they still have not delivered a single base model Model 3, which they took deposits for in 2016 and promised deliveries for in 2017. And they've since discontinued that base model. And that basically also shows that their plan to have a very low-priced car isn't really working out. There are also anecdotes of people unable to get spare parts or repairs. Pat and I had someone on our boat who bought a Tesla, and his Tesla got in some sort of accident last fall, and it was in the shop from, I think, last October or November until this June because there were no spare parts. So he was out of having a car for like 8 months because parts did not exist for the car. And this was like structural damage to the car. It wasn't like something really weird. It was like a pretty major component of the car. For this reason and for poor quality control, Consumer Reports withdrew their initial review of a couple of their Tesla models. They initially gave them the highest possible review, but then just basic quality for the car and the lack of parts caused them to recall that review. So Tesla in comparison to other automakers, on the left is a chart of the market value of Tesla compared to Ford, GM, and Fiat Chrysler. You can see that Tesla is worth, it's like 4 times more than the other 3 American automakers combined. And then looking at Toyota, Toyota has a market cap of $205 billion. Tesla has a market cap of $295 billion. Toyota is the world's largest automaker and the most profitable automaker. If you took the number of cars that Toyota made in 2019, you divided their market value by the number of cars sold, they're worth $15,000 per car. Tesla is worth over $800,000 per car sold in 2019. That really just illustrates how ridiculous Tesla's current valuation is for the amount of revenue that they are pushing. And it just shows how much they would need to grow in order to become like equitable with the other automakers in terms of how many cars they actually make. In terms of raw numbers, Toyota in 2019 sold over 10 million cars for $23 billion in profit. Tesla sold 350,000 cars and lost $69 million. They have since had a year of profitability because the last 2 quarters of last year, first 2 quarters of this year have been profitable, but they are they're operating at significantly less than an order of magnitude of the world's largest automaker, of which they have a market valuation advantage of about 50% on. So that...
Can I ask you a question about that? Oh, you might address it later also, but where does that $69 million come from? Like, is it venture funded? Is it Elon's money? Whose money is it?
We'll get into where most of their
Okay,
money.
perfect.
Tesla's financials. They just posted their first year profits. That earnings report was today. However, their margin per car is going down, so they're making less and less money per car as they're lowering the prices that they sell their cars at. Part of that is the fact that originally, when they had the original market was high-priced cars, which they could have higher margins on. And then also there was a lot of pent-up demand that has since been met due to the fact that they're making more affordable cars in higher quantities. So the people who are willing to pay whatever price for a Tesla, there are only so many of them, and a lot of them have already purchased their Tesla. I read a really interesting article where they went into, based on if you buy Tesla right now at $1,500, how long would it take for you to recoup that amount of money? And their math was based on the earnings expectations, the most optimistic earnings expectations for 2025, coupled with assuming 10% growth per year, it will take until at least 2041 to recoup a $1,500 Tesla stock bought today. And taking 20 years to recoup an investment, that is a pretty low margin. And a lot of investors would not be happy with that. So it really shows that it's not the fundamentals of Tesla that's causing this high price. It's something else. And to talk about, we'll go into this later, but to answer Robert's question a little bit, since it is about Tesla's financials, most of Tesla's money now is raised through the selling of stock and bonds. That is where most of their money comes from. It is not the selling of cars itself. And that is going to end up being a potential problem if their stock tanks, if that's the primary way that they make money. So the rational and irrational best cases for Tesla. The rational best case is that they have approximately the same value of sales and slightly higher profitability than other automakers. And it's just because, you know, there are people who they place a lot of value into the Tesla brand, and they might be willing to pay more for an equivalent car than from other automakers. In this rational best case, they'd also sell millions of cars per year, kind of to be in that, you know, Ford, GM, Toyota realm. They might make high single to low double-digit billions of dollars in profit. Their current valuation is far out of this range because they are, by a significant margin, the world's most valuable automaker right now, and that's not even pricing in the amount of uncertainty and risk that comes into the fact that it's very likely they will not, or it's possible that they will not meet that parity in terms of sales with other automakers. So for them to be worth 50% more from the second highest valued automaker when it's not even certain that they'll reach that value, it's, you know, they're overpriced. The irrational best case, which is something that you can find by reading through blog posts and Reddit posts and all these other garbage things, is that Tesla is going to become the world leader in AI, automaking, energy, self-driving cars, rideshare, rockets, and tunnels. And that is going to be why, that's why Tesla is worth so much money right now. So an address of this irrational future. A big thing that the Tesla true believers talk about is the batteries and how Tesla is going to rule the world for batteries, but Tesla's batteries are made by Panasonic. So if, you know, Panasonic is starting to sell those batteries to other automakers now, so Tesla's big advantage in batteries isn't due to their own, you know, it's not their own work that's necessarily done that. Self-driving has a questionable future. Leo talked about a little bit, all of the scams involved with self-driving. There's also the fact that Tesla's admitted that they were too optimistic on self-driving cars. There's a lot of regulatory hurdles that need to go through. Self-driving is most likely not really anywhere near this case where it's going to be able to drive a car with no human intervention whatsoever. Rideshare has very questionable profitability. Last year, Uber lost $8 billion, I think it was.
Another question on that note is, and a very serious question, do you think the valuation of Uber or Tesla is more criminal?
So I guess at least
That's a big one.
at least Tesla has posted a profit, I guess. But here's the thing. I would say that's a very interesting question, because for Uber, the more rides Uber gives, the more money they lose. Growth is loss for Uber. And for Tesla, there's at least a road forward for Tesla, but they are significantly overvalued. Uber is also significantly overvalued because at least at the end of the day, there is like some semblance of a real company behind Tesla, and there really isn't one behind Uber.
That makes sense. I mean, that makes sense as a philosophical question. And that is a philosophical question, and I like that answer to it, because Tesla, if you look under the hood or whatever, there is some profit or some revenue even, but profit there. Whereas with Uber, it is actually losing money. So its valuation should be zero, whereas Tesla's valuation should be $100 a share or whatever.
after rideshare, electric cars, other automakers are investing pretty significantly in electric cars. Really, Tesla's big market is the U.S. and particularly in Europe, the European automakers are the leaders in terms of sales of electric cars. Tunnels and rockets aren't Tesla. That's SpaceX and the Boring Company, which are both owned by Elon Musk, but it's not Tesla. But to a lot of Elon Musk and Tesla true believers, it's all kind of the same thing. And even if Tesla can achieve these goals, it's still probably priced too high, because even if we say, you know, there's a 20% chance that Tesla becomes the world leader in all these things, Tesla's worth about $300 billion right now. So you really think that Tesla in that world is a $1.5 trillion company? That's pretty ridiculous. So why is Tesla so highly valued? Well, the one point to make is it's not tied to performance. These are revenue expectations. The green line on the top is expected revenue, or it's investor consensus revenue for 2025, when the bottom one in orange is for 2020. So this is like the expert consensus on what they think Tesla's revenue is going to be for that year. And if you ask a lot of Tesla true believers, they'll say that investors and experts have always underestimated the amount of money or the revenue that Tesla will get. And if you go before like 2014 to 2015, you're kind of correct. They were underestimating how much revenue Tesla will be getting in 2020. But really, since 2014 or 2015, investors have been pretty steady about how much money they think Tesla will make in like 2020, for example. And really, the big drops that you see, in particular for like the 2025, 2024, 2023, are points at which Elon significantly overpromised revenue and sales and quotas, and then it became very clear that that wasn't going to happen and that they were in danger of running out of money. So really, Elon is the big reason why investors have had big drops in their expectations. And for as much as people claim that, you know, Elon is a visionary, investors have been largely correct about, you know, predictions 5 years out on how much revenue Tesla is going to be getting. This also shows how ridiculous it is that their value's gone up so much, because the amount of money they expect to get through revenue has not really changed in the last 5 years, but they're trading for double digits times greater than they were back in 2014, 2015. So now we're getting to why Tesla is worth so much. And when I found this explanation online, everything fell into place. Everything made sense. The entire, you know, I was not expecting to find such an elegant and simple answer for why Tesla is worth so much right now. And the reason is what's called a short squeeze. That is that Tesla has long been the single most shorted stock. Right now, there are $20 billion in shorts out there outstanding. The second most shorted is Apple at $13 billion. However, Apple has a market valuation of $1.5 trillion as opposed to Tesla's $300 billion. And Apple's probably the beneficiary of a bubble as well. To be honest, all the tech companies probably are, for some reasons related to future slides. But Tesla is likely the biggest beneficiary. So the short squeeze itself is it's based on the concept of a short. So let's say you have $1,500 in a brokerage account. You want to bet against your short stock that's worth $1,000. So in order to short that stock, you sell the stock at $1,000 by borrowing it from a broker at $1,000. If the price goes down, you can return the price to the broker at that lower price, and you get to pocket whatever the difference is. You make money off of the fact that it dropped. If it goes up, you have to buy the share at a higher price, regardless of what that higher price is, if the broker wants you to buy it. However, if the stock reaches the value of your account, in this case $1,500, the broker either tells you put more money in the account or you have to sell the stock. So what this can cause is a short-term rise in a heavily shorted stock's value to force the shorters to buy the stock due to the fact they don't have enough capital to continue shorting this higher value stock. This causes the short sellers to exit the market and gives the illusion of higher demand. You have this huge mass of shorters who are required to buy the stock because they put all of their money into the stock, into the short, and that causes it to look like there are buyers, which causes the price to go up even more.
Are there other companies that this happened to?
Yes.
Okay.
In 2008, Volkswagen, I think it was October 26th of 2008, Volkswagen I think their stock value went up in one day. It doubled or tripled in price. They became the world's most valuable company, and then it went down 95%. That is a much shorter term short sell. This is a longer term short sell, but there was a huge mass of individuals who shorted the stock. I think this is the graph that really shows what is happening. Last year, short sellers were forced to buy approximately 38 million shares of Tesla, which was 28% or 20% of all Tesla shares available to the public. So 20% of all Tesla shares available to the public were bought by short sellers last year. If you look at this chart, you can see that the number of shares shorted has been going down while Tesla stock price has been going up. And this is kind of contrary to what you might think. Because normally you'd expect that if there is a bubble, that more people will be shorting due to the fact that they would stand to gain more money from it. However, this type of relationship is actually pretty indicative of a short squeeze because it shows that all of the people who want to short it are getting forced out of the market. It could also be, this is just my postulating, it could also be that all of the people who wanted to short are generally people who are skeptical of Tesla stock in the first place, and that a lot of those people at this point just see that Tesla stock is incredibly volatile and they don't want to play that game at all, and they just decide to get out of it. But this shows that a significant number of Tesla short sellers have been getting forced out.
Did you come across any information regarding the time frame of the contracts that they're purchasing? Is it like
I do not know the time frames themselves, but the thing is, basically the way that it works is that if you hit your the maximum value of your account, it's all on very short time frames.
Okay.
Because it's basically as soon as you hit that value, the whoever your broker is has like an instant option to have you buy the stock.
So this is a bunch of like Wall Street bet jabronis with like $1,200 in their account shorting Tesla and then like instantly forced to buy out like all of these shares.
I think so, because I think that more of the institutional investors who are shorting it have enough capital that they're not necessarily forced out by this. I think it's people who they thought there was no way Tesla was going to go up anymore, so they pretty much took all of their liquid cash and put it into shorts. However, this causes a very interesting trend. You see a difference between the institutional and the cult and momentum investors. Institutional investors are hedge funds, investment banks, really the big expert buyers of stocks. They own 80% of the stock market and they own 74% of Tesla shares. So any movement they would do would have a huge impact on Tesla's price. However, they only bought 1.8 million Tesla shares Q4 of 2019, and short sellers bought 10 million shares in the same time period. So even though institutional investors own 74% of Tesla shares, a group that's buying 20% of Tesla shares is still buying 10 times as many over that same time period. That's because a lot of these institutional investors are long-term holders and they're not quickly buying and selling these shares. So ultimately, what it appears like is that most of this movement in Tesla's stock value is coming from a combination of cult and momentum investors. Basically, the stock goes higher. This causes Tesla true believers and other investors to buy Tesla shares. The Tesla true believers think that Tesla is going to be the biggest company in the world and they want to get in on the ground floor. And they think that even with a $1,600 value, it's still the ground floor. And then the momentum investors are like the Wall Street bets guys who are basically, they see a stock going up and they just want to go in to hold on to it and then sell it before it drops off. And they have no real interest in holding the stock in the long term. It's really just, it's a coin flip effectively for them. It's really just, they're trying to flip these shares. So this triggers a cycle of Tesla price jumps and short squeezing, because basically the short sellers are forced out. That shows demand. Then the momentum investors and the cult investors buy more shares. That causes the price to go up even more, which forces even more short sellers out, which causes more momentum and cult buyers to buy it, which just, it causes a cycle. It's effectively the definition of a bubble. If you look at this picture on the right, this is Robinhood shares of Tesla that are being held, and you can see it has just, this shows how many individual investors are just jumping onto Tesla right now. And when you have the number of people buying it pretty much exactly match the trajectory of the price itself, that is very rarely a good sign.
Are you able to see how much of the market cap is like Robinhood people? I assume they don't give that out.
I have not seen that. You might be able to, but I haven't seen that.
Because I mean, and Pat got at that. Go ahead.
What it really looks like now, though, is that it's basically, like I said, the people who buy and sell the vast majority of stocks are not doing any movement on this. This is just Robinhood people, or people with whatever trading app they're doing, are just buying it in such huge mass.
Yeah, Schwab is free too now, so you can
Because
buy.
Wall Street loves a bubble too. Like I don't want to let them off the hook for this.
Institutional investors are most of Wall Street. And the thing is, if you look at most investors who put their predictions out, the vast majority of them have Tesla as a hold stock or a like sell now stock. Because a lot of these guys have had Tesla as a sell stock since it was worth $500. And it being worth $1,600 has certainly not made them move off of that position.
I get that. I get that they're not the momentum investors, or cult investors, obviously. But I gotta assume that Wall Street is also doing some spicy things that is driving this, and people are benefiting on Wall Street from this. But I mean, I don't know. I don't have any evidence of that. I'm just curious.
Like I said, most of the expert opinions I saw either said, if you have it, sell it now. Don't get involved, and if you have the money, short it, basically.
Yeah. The current rating on like Robinhood's analyst graphs are 28% buy, 34% hold, 38% sell. So it's just like, shrugs.
So the future of Tesla stock. The short squeeze will not last forever. Short sellers will eventually get wiped out. And if the price goes high enough, institutional investors might start to sell. And once a sell-off starts, there's not much to stop it. It's due to the fact that basically the short sellers or the shorters and the momentum investors basically would stop at almost the exact same time, because you would, as soon as the short runs out, the stock will start going down. As soon as the stock starts going down, all of the momentum investors are going to start dumping the stock. And in that case, you're basically going to have a cycle that is running in reverse to what was happening before, where it's just going to be a sell-off, basically. However, if Tesla's added to the S&P 500, all bets are off. And they met their final big wicket on that today, because their last big wicket was that they have a year of profitability, which they have now. The reason why all bets are off now is that if they're added to the S&P 500, any index that's set to the S&P 500, if they don't own any Tesla stocks, they'll need to buy Tesla stocks in order to match index requirements. So in that case, that might drive the price up even more. One very interesting take that I saw was that Tesla could use the high stock price to buy another automaker. This is something that Warren Buffett is particularly known for doing, particularly in the 80s and 90s. He would use companies that he owned that he thought were particularly overvalued, and he would sell interest in these overvalued companies to buy controlling or high minority shares of companies they thought were undervalued. So one of the articles I saw was that Tesla could basically use its very high stock price now to either buy a controlling interest or a very large minority interest in an automaker like Toyota. And they could basically do that so that they have the expertise of Toyota, the logistical infrastructure of Toyota, and the consistent, strong profitability of Toyota in order to help them in the long term. I think ultimately that wouldn't happen, though, because I think, for one, Tesla's like entire appeal is that they're not another automaker and that they're somehow different from every other automaker. So it could cause their price to go down if people think that, you know, they could become Tesla, Toyota. And then another one is that I don't think Elon would want to deal with, you know, trying to control another automaker. Also, just because a company is strong and growing doesn't make it a good investment. Like with Tesla, if it'll take until 2041 to recoup your investment, that doesn't make it a good investment. And the nuts and bolts of the company do appear to be stronger than they were like a couple of years ago when it looked like they might just run out of money. But again, that does not at all justify a $1,500 or $1,600 share price. Warren Buffett's take on all this, he hasn't commented directly on Tesla, but these are a couple of insights that he has that kind of run contrary to what is likely causing this bubble. And one of those things is the only reason for putting cash into an investment now is because you expect to take cash out, not by selling it to someone else, because that's just a game of who beats who. And that basically runs contrary to the entire Wall Street bets philosophy, which is you just get a stock and then you dump it off on somebody else. And another one
I think also the Wall Street philosophy. I think the Wall Street bets is a exaggerated clown mirror version of that. But
another one is if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. I think that's another good one because, and you have a lot of people right now who are basically saying or thinking that they can't afford to not own Tesla stock because it's gone up so much. And I think it was Isaac Newton who invested a significant amount of money into one of the East or West Indy trading operations.
East Indy Trading Company?
It was one of them. And he basically said that in order to like profit in this type of situation, you just need to be you need to just have someone who's a greater fool than you. But if you have anyone who is if you are the greatest fool, you will lose everything. But I mean, like the people who bought Tesla at $900 and it's at $1,600 right now, if they sell right now, they might look smart, even though there was no real basis for the money that they made. And they are by any real measure a fool because they bought Tesla at $900. But, you know, if there's a greater fool who will buy it at $1,600 or $1,700, then, you know, they come out looking smart. And Elon is ultimately the key to all of this. It's because he's lauded as a visionary. He oversells and overpromises. With the Model 3, he tried to make a fully automated factory, which he completely bungled. And that was when they had people hand making all of their cars for significantly higher capital cost than other car companies. Basically, the Fremont plant where Tesla makes their cars, when I think it was GM and Toyota owned the plant in a joint venture before, and they were making almost 1 million cars a year at that plant. And Tesla now
there's a good This American Life episode about that plant.
Yeah, and Tesla in their best year has made just over $300,000 at that plant. So it shows like, you know, they are not doing anything like well, really, in that regard.
Can I ask a quick question?
Yeah.
So the idea was to make a factory that was fully automated,
Yes.
and they ended up with a factory that was less automated than most other auto manufacturers.
Yes. And
In fact, it wasn't automated at all.
The reason for that is I was reading it was a take by somebody who has a long history of working with Toyota, I think. And they basically said Toyota might at some point try to do something like a fully automated factory. But what they said was Toyota would never try to make a fully automated factory while also making that factory for a new model they've never made before. Because they said doing both of those things at the same time is absolute lunacy because you don't know how to make it in the first place and you're going to invent an entirely new process for making it simultaneously. It doesn't make any sense.
At work, we call that building the plane while you're flying it, and we do that a lot.
Yeah, so like Toyota would say something like, you know, we would want to make sure we know everything about making this car before we would try and reinvent the entire process. Elon's also a shameless self-promoter, very big on Twitter and whatnot. His companies are as much about him as the product. I'd say his companies are more about him than the product, honestly. Like, he is, if you just look at like a graph of things he says on Twitter compared to Tesla stock price, there's a lot of volatility that he introduces. And a lot of the upper limit on the perceived upper limit on the company is the thought that he is this visionary. He also has demonstrated poor judgment. He has a lot of Twitter feuds and accusations. His SEC troubles, which Leo talked about in a previous presentation. He has meme features in cars that cause quality control issues, like the gull wing doors and the biohazard air filtration. And he was trying to build a new model of car and a new system of car manufacturing simultaneously. So the fall of Tesla. Tesla stock will likely come back to earth. Who knows what effect that will have? No one knows the true value of Tesla stock. There's a possibility that once Tesla and Elon's aura is tarnished, the company loses nearly all value. Basically, once that spell Elon has over people is proven not to be the case, there might not be a lot of perceived value left. It might also just cause people to get even more defensive and claim that short sellers screwed over Tesla.
I'm now thinking of Tesla's collapse causing the next recession instead of coronavirus, like Tesla's collapse triggering an entire recession across the economy.
If they're part of the S&P 500, who knows? My ultimate, I thought you were going to say, what if Tesla causes the collapse of Western civilization?
Well, I mean, we'll see.
That's more likely, I think.
My takeaway is do not get involved with Tesla stock either as a buyer or a short seller. It's a fool's game. But if you have to play short sell.
How do you feel about the efficient market hypothesis? How is that standing up to?
Eventually, long enough term, it's going to catch up. Because, you look at Microsoft, I think it was another comparison to Tesla. Not nearly as extreme. But Microsoft really peaked in 1999 or 2000, where they had numbers not nearly as bad as Tesla, but in terms of they had strong growth. They were by any definition a strong company, but they were incredibly overvalued. And now, if you look at, I think it was in 2000, Microsoft was 5 or 6% of the total value of the S&P 500. And last year, Microsoft was between 2.5% and 3% of the value of the S&P 500. So, and their earnings have gone up a lot since that time. So really, it has been a case of they've still had growth in their stock. They've had very strong growth overall, but the growth in their stock underperformed their overall growth due to the fact that for so many years, their stock so significantly outperformed their growth. So it could be that, Tesla has strong growth from here on out, and it, maybe they are just a stock that sits at $1,500 for the next 20 years. That is a very real possibility. And that could be a case where they don't have a complete collapse. It could be a case where they have a good future, but they're just overvalued, and the market over a period of decades has a correction. It could also be that correction happens in the course of 2 weeks. And, 2 weeks from now, Tesla is worth $300, and you have a bunch of people on Wall Street bets who are,
penniless.
Yeah. Well, so it's I go through Wall Street bets for the Schadenfreude and whatnot, but there was a person there basically saying, I don't understand why you guys do the things that you do. If you take the money that you invest and you put it into indices and mutual funds, you are almost certainly going to make more money in the long term than what you do now. Because what you do now is you're basically making these bets that have no real goals or insight. So you're almost guaranteed to lose your money eventually. Because even if you at some point make 10 times more money, you're going to end up losing it eventually. And the people in the comments were naturally calling him the millennial C word, and the duck word, as it were. And also there were people basically saying, I already don't have money. What's the difference? I'm going to be broke either way. The only chance of me making money is to put it in big bets like this. So that's kind of the mentality of a lot of these folks. Like I said, there are a lot of people who think, they have fear of missing out, and they think that they can't afford to not buy Tesla. but it's incredibly volatile. Yeah. Speaking of the bonds, Tesla has a couple of really big bonds that are reaching maturity in, I think, next year, 2023 and 2025. So it'll be interesting to see if they have any money to actually pay off those bonds, because there was a time that where their bonds were rated like junk tier. So any questions?
Nathan, I noticed that you didn't talk about the portion where
Brian's.
Elon sells his shares in order to finance like all of his debts.
Well,
I was going to ask about that
I think
too.
Leo knows more about that, and I don't think it's that he sells his shares. It's that he uses his shares as collateral, which is even more dangerous, because if the shares were worth like $700 when used them as collateral, if they drop below that amount and he doesn't have any money to pay off his debts, he doesn't have any collateral for his debts either.
Well, that's not a problem for him, though. That's a problem for the
That's a
person
problem for the
loaning him
bank.
money. But like, I do wonder if there's like a succession style scenario where if his stock drops below $350, he owes all the money back, like
I can
right then and
explain that
there.
if you're interested.
I am.
Because the same thing, I really recommend everybody read the Enron book, The Smartest Guys in the Room, because the same thing happened to Ken Lay. He owned billions of dollars in Enron stock, and rather than sell it for cash and then use the cash to fund his like personal expenses, he did the same thing where he put it up as collateral for loans that he would then use to fund his expenses. So he had like an extreme personal interest in the stock price not going down, because, like you say, Robert, when it does, the banks have already set up, they have margin calls too. So if the price does go below a certain amount, it's like you need to sell it for real and pay us cash for real. And it's right at the time that you have no assets, because all of a sudden the vast majority of your money, which is tied up in this stock, is worth less and less and less and less. So it's like a death spiral for the personal finances of people like that, because the worse the price gets, like you say, the more actual money the bank wants and the less actual money you have to give. And not only is, I think, over half of his ownership of Tesla is pledged as collateral for various debts, but I think his brother too, a huge amount of his Tesla shares are also collateral for personal debts. It's real bad news.
I am picking it up. But also, I think though with Tesla and its debts too, its debts are very low if you compare it to its market cap, but they're very high if you compare it to its cash flow. So I'd say that's not a very good position to be in as well. There any?
I'm just looking up the exact figure on his personal debts because I'm very curious.
Yeah, it'd be interesting to see him
I think there have also been
become
allegations
penniless.
that he deliberately tries to manipulate the stock price to unlock certain like compensation tiers that are like prearranged with the board of directors, like to hit the milestones that he needs to hit to get like extra payouts.
Whatever happened to him selling all of his possessions and like his house?
Will own no house.
Yeah, I don't know what the story behind that was. One story
That's in this Wall Street Journal article too.
Evidence behind it was basically that he had no money and he didn't want to sell any Tesla stock, so selling off all of his possessions was the only way to make.
Yeah, that's basically it. That's the only way to get cash if you're not going to sell your shit.
I will say as well, I was able to find an article that had a list of like Tesla insiders, like board members and that type of stuff, and their trading histories, and none of them have bought any Tesla stock in like the last year. They've all only sold, which is again not a great endorsement of their current valuation.
I would also point out that the company itself regards it as enough of a risk that they include it in their like annual and quarterly filings. They say if the price of
their stock is overvalued.
If the price of our common stock were to decline substantially and Mr. Musk were unable to avoid a sale of the pledged shares, for example, by contributing additional collateral, which he can't do because he doesn't have it, Mr. Musk may be forced by one or more of the banking institutions to sell shares of Tesla common stock under the terms of his loans. Any such sales could cause the price of our common stock to decline.
So I guess in that case, that would even further fuel the sell-off because he'd be forced to sell off all these stocks. What do you all think the odds are that this sell-off happens and then Apple buys it? We finally get Apple Motors that we've been promised.
We get the iPlane 1 right in time for Kanye West to become president, fly around in the iPlane 1.
Yeah.
That would be great.
So this is more like the Uber question that I asked, but what other stocks are this bad? Like, no, I assume no one.
Tesla is, if you look at like the disparity between their revenue and their valuation, Tesla is far and away the worst offender.
Because this is different. This does really seem different than Uber to me. Uber is always the biggest offender in my head, but then also like Airbnb and all of the recent IPOs.
The difference is, I think, that there are investors that think that Uber somehow is going to pull like profitable steam out of somewhere.
Don't they also have a autonomous car division at Uber where they're trying
Never going to happen.
Never going to happen.
Oh no, I agree with you, but like
again, that I think that's
smoke show.
What people think they're going to pull a scheme out of somewhere.
But that's the value of Uber, presumably, if there are people who are like quote unquote smart in buying, is that it becomes a monopoly and it takes over the world, basically.
Yeah. The thing with Tesla, I think, is that I think Tesla is fundamentally new ground in the sense that I think this is the first stock where you have a combination of this many short sellers, and you have impassioned people who basically trust the company regardless of reality. And you have a combination of social media and like very easy for individuals to buy stocks methods that allow just this mass momentum buying. I think all of those three things together, it's a very unique combination that hasn't happened before.
It puts it in its own tier above like the tech IPOs that I think many are also over.
I think that fundamentally, if you look at like other tech companies, they have a very similar chart to that Tesla one for Robinhood. I think that like the Apples and the Amazons and the Microsofts of this world right now, there is a big momentum buyers just being like, these companies are going up, up, up. I got to get in. So they're just buying it. I don't know if it's...
It can't possibly fail.
Yeah, I think that those companies are a little bit better in terms of nuts and bolts. But I mean, is Apple really worth $1.5 trillion? That's, a question. I think both Microsoft and Apple are worth a little bit north of $1.5 trillion right
now. Yeah, there are like... I would be very interested in a like numbers-based assessment on how much is like the Robinhood effect versus how much is other things, because like
it's
low
probably
interest,
findable to figure out how many shares are owned by Robinhood.
Yeah, because like low interest rates and things like that are also like there's now nowhere else to put your money if you want to make money besides stocks, and I mean it's not Robinhood investors who have money to stash away. It's based on rich people and institutions.
Based on the profitability of Tesla right now, based on their last year, the average return per stock based on the profitability of the company itself is less than a treasury bond right now for Tesla.
Mm-hmm. I just want to throw one thing out there.
5% is the Tesla return on investment right now in terms of their profitability. Really, the only return on investment right now for Tesla is their stock is going up. And their stock is going up just because their stock is going
up. This is from May. As of then, Elon Musk had pledged 54% of his Tesla shares as collateral, which was up from 40% the year before.
54% of his Tesla shares right now, that's like 30 or $40 billion.
Well, yeah, back then it was $15 billion.
I think he put a lot of the money into SpaceX and Solar City, I believe.
Yeah, he has personal credit lines of $550 million from Morgan Stanley, Goldman Sachs, and Bank of America, but those have to disclose it because those banks also have relationships with Tesla, whereas he might have credit lines with other banks that don't. He also told a judge during his first divorce that he had run out of cash and was taking out emergency loans from friends and family to pay his living expenses. So if
I'd
things
be
start to go
interested
bad,
in
we can expect to see them go really bad.
I'd be interested in like how much it's gone, how the stock has gone up since that
Since
figure,
May 8th,
basically.
it's like
'Cause
doubled at least.
So if you remember, it was a few years ago when he did that tweet about Tesla at 420.
Yeah.
And then after that, it sat about 300 for a while. A little bit over a year ago, Tesla was like $300 a share.
Yeah, on May 8th when that article came out, it was at $8.19 a share. Now it's at 1,600. So it's basically doubled.
Because that works in his favor somewhat, assuming he's not lending double the money. But ultimately, it doesn't matter when it comes crashing down to $100 a share.
Right. Yeah, if you're him, borrow right now.
Good stuff.
But I assume no sane bank would loan him money.
I'm not sure, Robert. I'm not sure how much it really benefits him that the stock is high right now, because if he defaults, the collateral is 54% of shares, regardless of how much it's worth. So if he defaults right now, he still needs to give them 54% of shares, even if that's $30 billion on only.
But he could sell his other shares to cover it with cash.
The idea with the collateral is you can sell, yeah. So
I think the only real issue is if the price starts to go down.
The concern is if he would be forced to sell his shares, because otherwise he could just sell his shares at $1,500 so that he doesn't have to forfeit the collateral.
But then all of his stocks will be collateral.
I mean, ultimately, yes. That's what you run into.
It looks like it's headed that way anyway.
Yeah.
I don't know.
It's just a matter of how we get there.
I still think it would be really funny if Tesla bought Toyota for like, they bought a 51% share for, like a third of Tesla or something like that. And then Tesla like crashes before they're able to like merge the companies. Tesla crashes before nothing, but all of a sudden Elon Musk owns Toyota and like Tesla doesn't exist anymore. And like all of the Toyota people are just absolute fools because they have no money right now. They have no money and they like gave up a company that was making tens of billions of dollars in profit every single year.
There are some good books about schemes like that. All the leveraged buyout stuff is not the same as that, but similar to that, where suddenly you become the owner of a $10 billion company and also of $9.9 billion of debt.
I mean, another quote from Buffett is only be willing to buy a share of a company if you'd be willing to buy the whole thing. So think about it. Would you rather control 100% of Toyota right now or 100% of Tesla right now?
Well, if at $1,500 a share for Tesla, I can certainly answer that question.
But like, let's say you have to purchase the actual, like, the thing is, Tesla is, you would need to spend $300 billion to buy Tesla, whereas you only need to buy $200 billion to buy all Toyota.
No, it's obvious.
I would rather take Toyota at $200 billion to Tesla at $300 billion. Like,
I think most people would. I think clearly every bank giving advice is saying that.
Well, yeah, they are. But
take
like,
Tesla and liquidate immediately everything. Just fire sale.
You end up only getting like $50 per share.
You sell everything.
No, I think that's what would happen if Tesla bought Toyota and Elon Musk still had like all of the like, he still had all the decision making. He would probably fire sale everything from Toyota.
Oh yeah, use it to buy more stocks of Tesla.
And they like wouldn't exist anymore. So like he wouldn't gain anything from it. All of the people would like quit. He would sell all the equipment for like pennies on the dollar.
And buy Tesla stock with it.
I have a question actually about this presentation. What do you think the inciting incident that causes the crash is going to be?
Short sellers running out.
Yeah.
What does that mean?
It's
so.
I mean, if
go
we
ahead.
go back. see
when
the
that
number,
hits zero.
not when it gets
Low enough. Yeah.
Basically, it gets low enough, or the short sellers who still exist have enough capital that
The frenzy like burns out, right?
Tesla's stock going up temporarily does not force an appreciable number of short sellers out of the market.
Do you think there's any like business reality that could cause this instead? Like, is there any situation that would stop the irrational optimism? Like, they make 10 cars next quarter, like something terrible. Is there anything that could do it, do you think, or no?
The Cybertruck being like just an absolute bust. Like you can't even drive it off the lot kind of
Well,
thing.
I mean, they're probably just not going to make the Cybertruck. Like,
Yeah.
that's the reality of it. I mean, I think it really is. I think if I remember correctly, these big releases that they do are all like shortly before earnings calls, or like shortly before meeting these metrics and like stock price tied to incentives for Elon.
You
Like,
gotta get those pre-orders.
it's all, well, so I mean, that was the big thing with the Model 3. The Model 3 just gave them additional runway, basically, because it was a short-term infusion of cash that they desperately needed. But I could see, like, I don't know, I think that as soon as people stop buying it a lot, and I mean, if you have somebody who, they put all of their money into Tesla at $1,700 with the expectation of flipping it, and it drops, a lot of those people are just going to start unloading everything that they have. And then that is just going to make the process worse.
No, I mean, it's obviously a bubble. The question is like, will it hit which investment banks targets will it actually hit, or will it go below all of them?
The case where it could have the widest market impact, I think, is if this all happens after the part of the S&P 500, after all of the indices have diversified to include a significant amount of Tesla stock, and then Tesla goes belly up and they're all of a sudden not part of the S&P 500 anymore.
And then all those funds unload.
And all of those funds, luckily, I mean, it's a lot of companies, so hopefully it shouldn't have too much of an effect. But
okay,
did you see that? Oh, go ahead. Sorry.
Same question. Like, what would cause this to come all crashing down? But what would the thing be in Elon's personal life? Like him as a person, what like events surrounding him would cause this whole thing to come apart?
I honestly think anything short of the SEC storming the Tesla compound and forcibly removing him from it, anything short of that will not cause.
That could happen.
Pedophile? Outed as a pedophile?
Before making accusations, we should probably.
So Grimes put their kid up for adoption or something like that, and like separate.
No, the thing is, he said that they had negotiated selling Tesla at $420 a share, and that turned out to be fraudulent. I mean, like, I don't know. What can really?
If he does something like that again, it's game over, I think.
But is it game over for him or game over for Tesla? I mean,
it's game over for him.
But I know that part of this thing, Nathan, that you're saying is that it is him. He is what is driving the cult of him is driving these prices
I think
up.
Tesla at $1,700 does not survive without Elon Musk, because I think a significant amount of that valuation is the price to just have Elon Musk for whatever reason.
I mean, I think we know the reason.
Did you see that J.D. Power and his associates ranked the Tesla Model 3 as last in terms of build quality of all the cars they tested?
Well, I mean, that's another case of them not understanding the nuts and bolts of making cars. Like, I've read plenty of articles about things that are just like, of course a car shouldn't have those problems. Like, any car that's properly made shouldn't have these problems. It's stuff like you go through a car wash with a Tesla and water starts leaking into your like
They had 250 problems per 100 vehicles.
Yeah, it's stuff that, like, there have also been problems with, they used aluminum siding for everything, and it turns out that, like, steel if you get like a little bump with steel or something like that, for a lot of cases, you can like hammer it out like a little dent. But aluminum just like splits and ruptures. So there have been cases where very, very minor collisions need significant body and structural repairs because everything's made out of aluminum.
Uh,
Talking about the stock market always depresses